In this module, we are going to discuss how to use the Practice Engagement Guide, or PEG, for review engagements. And as always, we want to be efficient and effective, follow professional standards, and document what we have done properly. Now, in terms of documenting what we have done properly, this is the documentation requirement for Section 2400 on review engagements. And technically, it's the only documentation required. There are other things that it says we shall do, but it doesn't say we should document that we've done them. Now, sometimes we may decide to remind ourselves, because we think it's particularly important to document it, but that's a decision for us. We don't have to document everything under the sun. This is the list of what must be documented. So we must document the nature, extent, and timing of procedures. We must document results and conclusions. We must document matters arising and how they are dealt with. 105 says we must document who and when the procedure was done. And PEG, by the way, does not do when, does not date it. So one of the changes you're going to have to make throughout is to beside the column where it says who did it, you're going to have to insert a column saying when it was done to comply with this standard. It's required mandatory documentation, so that's a required mandatory change. And then who reviewed when and the extent, and if the same person does all of the review, then the form adequately documents that, who and when. But if different people do parts of the review, then signing at the bottom doesn't document who and when. So again, on that form, you are going to have to add a column for date done and make sure that's completed everywhere, because this is a requirement in 105, documentation requirement. Documentation of discussions with significant matters with the client. Often in a review there will be no such discussions. 107, problems and how fixed. Often there will be none. And those are things that are kind of self-documenting. If there are significant matters, there's correspondence back and forth. That will be in the file. It will document it. You might want to remind yourself with a checklist question to do that, but perhaps you don't even need to do that because the documentation will be kind of automatic. Now, the documentation requirement does not include any requirement to document anything about internal control. And indeed, the primary thing it focuses on is documenting documentation, who and when. That's purely documentation. That's not what I call work. Discussions with the client, problems and how fixed, matters and how dealt with, results and conclusions. The results are it worked, and the conclusion is nothing came to my attention. So other than the nature, extent, and timing of procedures, that's the only work we're documenting. Anyway, now the other thing the section says, doesn't say we have to document it, but it says we have to have it, is an understanding. Now there's a variety of ways that could be understood, or rather a variety of ways it could be stated. It could be stated that we need a complete understanding. And that would be very time consuming and very hard to do, and indeed impossible. You'd have to know about research and development, you'd have to know about marketing, you'd have to know about future plans, you'd have to know about personnel policies, hiring policies. There'd just be an enormous amount of stuff that you needed to obtain, and impossible, and that's not what it says. It doesn't say a complete understanding. It also doesn't say understand. The accountant shall understand. Now that would be less than complete, but to understand would still be a lot, and to understand the client, there would still be many areas beyond the financial statements that you had to understand. And it doesn't say that. It says an understanding. And in 43 it says an understanding enough to identify likely material misstatements and to design procedures. So that's not a lot. That's not tons and tons of stuff. 44 says shall include an understanding of accounting system and records. So that's not a lot. Documentation requirement doesn't include a documentation of this understanding, though you might choose to. It'd be helpful for next year to the person doing the file next year sort of have some hints about how things are done and what they might want to develop an understanding of. But an understanding is much less than the two items above, and it's only those bits that the practitioner thinks is relevant. And if someone comes along and says, how come you didn't document this as part of your understanding? You would say, well, I didn't think it was necessary, and I had enough of an understanding to identify likely material misstatement, and anyway, I'm not required to document anything, so I didn't do it. Now the other question is, what is a likely material misstatement? And there's no definition in 2400 of what likely means, or what likely material misstatement means. So we're left with the dictionary definition of likely. And the dictionary definition of likely is well might happen, or probable. And the definition of probable is likely, so that's no help. But well might happen, it's much more than 50%. It could well happen. Now if they'd meant 50%, they would have said as likely as not. So if material misstatement as likely as not would be 50%. They didn't say that. They said likely. They also didn't say more likely than not, because more likely than not would be just a bit above 50%. They said likely, and so that's got to mean 60% or more. It well might happen that there's a material misstatement. It's really kind of possible. Now, in an audit context, likely material misstatement versus risk of material misstatement, they started out when they drafted this section talking about risk of material misstatement, and they changed it to likely material misstatement because they intended to mean something different. Now, in an audit context, I would say likely is more than low risk of material misstatement. That's defined in audit literature as 40%. And likely is also more than moderate risk of material misstatement, which moderate's 50%. So we're left with likely being the same as or even more than high risk of material misstatement, which is 60% in audit literature. So we could argue, I suppose, that likely material misstatement is a 70% possibility of happening. Now, how often is material misstatement likely? Now, in an audit context, if we're dealing with less complicated entities, rarely. Often you will do an audit and every component will be low risk of material misstatement. Now I do see some people go, oh, I can't do that. I should pick 3 or 4 and call them high. So I will pick the highest areas of low risk of material misstatement and call them high, and then do a whole bunch of audit work. That seems rather wasteful and inefficient, so don't do that. If it turns out in an audit that risk of material misstatement is low, you've done what you needed to do, you've done risk assessment procedures, it's low. In a review, we're dealing with clients that are perhaps even less complicated, much less complicated. So almost never, if you had a review engagement and concluded that material misstatement was never likely in any of the components after we'd done what we needed to do, that's fine too. If you conclude that there is likely material misstatement, then you need to do something about it. But if you conclude that there isn't, that's fine. Don't make up a few just for to make somebody happy. Now, standards require, let's compare audit and review standards. 320 requires us to determine and revise materiality, And 2400, 41, and 42 have the same requirement. 31530 requires risk assessment procedures to identify the risk of material misstatement and design further procedures. 43 and 45 in the review section basically do the same thing. Have an understanding, and based on that understanding, identify likely material misstatement. 330.6 says develop further procedures, and paragraph 46 determine procedures in response to likely material misstatement, which might be none. We have to have overall responses in an audit, not mentioned in the review section. We have to contemplate pervasive risks in the context of risk of material misstatement. We do that only in the context of the report in a review engagement. And there's a whole section on our responsibilities relating to fraud. And fraud, there is no requirement to look for, consider, think about fraud in a review engagement. Now, a review engagement is kind of two-part. We are to look at all material items. Paragraph 46 says, look at all material items, do inquiry and analytical procedures, not necessarily that detailed, and then focus on where there might be likely material misstatements. So if you do part A and come up with nothing for part B, that's fine. So when we're tailoring the programs in PEG, the first part is tailored for that minimum inquiry and analytical procedures. We're doing what we need to do in all components, all material items, and maybe you decide to just say, I'm going to do that in all components, because a material item, it's not necessarily something bigger than materiality. Cash, which is smaller than materiality in terms of dollar value, is probably a material item. So maybe we just look at everything, and then based on some brief inquiry and analytical procedures, decide if we want to do more. So the first part of our program is tailored for that minimum, and the second part is a targeted set of procedures, or maybe a single procedure. We have identified a likely material misstatement, probably affects only one assertion in the component, and so a very specific procedure will be developed for that. Fraud in a review. If we look at what the section says, paragraph 28 says, as part of the acceptance process, and certainly in the engagement letter. It doesn't say you have to put it in the engagement letter, but the engagement letter protects me as well as protecting my client. Management is to acknowledge that they are responsible for internal control for fraud and error, and we are not. And I want that in the engagement letter. I might even put it in the rep letter. I would put it in an engagement letter every year. I want them to acknowledge that. We have to ask, and we don't have to document it, but I would, and I would document it in the rep letter. I would have management say, we are unaware of any fraud. And that's paragraph 47 and 69. Paragraph 51 tells us what to do if it's found, and mostly it's communicate. And then in the report, we are supposed to say, management is responsible for fraud and error. That's paragraph 94. But there's no requirement for us to look for fraud in a review. Now, if we found it, we would remain alert. But if we found it, we do something about it. But other than that, we're not looking for it. So I would be very careful with the word fraud, and I would be very careful as I'm going through and tailoring these forms. In the understanding form, it's mentioned twice. We are to describe any suspected fraud. We are to identify any fraud. My inclination would be to delete that as it's not needed, and starting to sound like we're doing something about fraud, and starting to sound like someone could say, hey, you said you did this, how come you didn't find it? You were trying to find it, you didn't, you should have. The systems form talks about fraudulent financial reporting. That goes way beyond just fraud, and certainly is not mentioned anywhere in the section fraudulent financial reporting. My inclination again is to take that out. The scope and risk form talks about pervasive material misstatement due to fraud, and then it says identify fraud. And I'm inclined now to delete all of those references, as particularly the last reference makes us responsible. It says identify all fraud. So someone would say, looking at your file, well, you said you were going to identify all fraud and you didn't, and there was fraud and you should have, so management wants to hold you responsible for fraud. I would take those words out. Now, there in 3 transaction programs, the word fraud appears. We're going to look at non-monetary items to see if there's fraud. I don't know how we could do that. Certainly I would tailor that out, and unless the likelihood of material misstatement that I had identified, and I don't know how I would have, but fraud in non-monetary transactions, and then I don't know that I'd ask. I think the other thing, if we get to the point that we've identified likely material misstatement, we're past analytical procedures and inquiry. We're into whatever we need to do to dismiss the possibility. So I would be very careful with the word fraud anywhere in these programs, and I would be inclined just to take it out, just because it starts to indicate that I'm supposed to do something, and it may get our staff running down the road of spending some time working on fraud when they shouldn't be, and they're wasting time. The other thing I worry about are the conclusion words, because we have conclusions and objectives throughout the programs. Now 74 says, consider if there is sufficient appropriate evidence. Sounds awful like we're going to say sufficient appropriate audit evidence. But it says we should obtain sufficient appropriate evidence to conclude. But the conclusion is, nothing came to my attention. So the level of sufficient and appropriate to conclude that nothing's come to my attention is a whole lot less than sufficient appropriate audit evidence, where I'm going to express an opinion. So rather than talking about sufficient appropriate evidence, which could be misunderstood, particularly by me, if there were conclusions, I would prefer to conclude nothing came to my attention. My conclusion is nothing came to my attention. So that would be my preferred conclusion. Now the other thing is, I want to have one conclusion in the file. I want to come at the end of the file to a conclusion that, based on what I've done, nothing came to my attention, and I can sign the review engagement report. I don't want 50 or 60 or 70 conclusions throughout the file that all need to be tailored. I would just take them out. I just don't need them. And the other, there are myriad objectives. To obtain sufficient appropriate evidence is our objective. Someplace or other we have an objective of doing it right. I don't think we need to repeat it over and over again. I would just take that out. Fewer words, less ink from the printer. Now, identified risk of material misstatement being high, and likely material misstatement, comparing them. Now, if you have identified risk of material misstatement as high, or you have identified material misstatement likely, and you did procedures and you didn't find anything, 3 possible conclusions. First thing you should conclude is, well, you assessed too high. It wasn't there. And next year, we should reduce it. So if we thought material misstatement was likely, we should change our mind next year and say that it wasn't. Second thing we might think is, well, did we miss it? Did we think it was likely and we tested for it and we didn't find it and it was there and we missed it? Should we redesign our procedure this year or next year? Another thing it might mean, and hopefully this is what it means, that I was worried about it. I thought there was a possibility. So I wanted to do a test, and if the test I did came back and said, no, it's not there, I'm happy. I tested, I found that it wasn't there. That's where the 60% thing comes in audit literature because we're not sure it's there. Sometimes you're going to go risk of material misstatement is 100%. I know the number's wrong. There is no allowance for doubtful accounts. There should be an allowance for doubtful accounts. I need to do something to get an allowance for doubtful accounts. And if I know there's something missing, so it's needed, and I'm not going to accept the result, well, I did a test and couldn't find any. It's needed, I need it. So I don't mean number 3, I mean number 2. We tested, we missed it, we need to test again. So we need to think about that, and we think about that for next year. Do we get rid of some of the things that we thought were likely last year and get rid of them this year? Or do we change things around a bit and say, well, maybe, the test I did last year was okay. Never bad to be unpredictable and try something different next year. So maybe I'll just look for it. I'm still worried about it a bit. I'm going to look for it differently next year. So let's think about that and that's true in an audit, true in a review. Now, the other thing is we could have extensive forms suitable for any possibility, and then train staff to tailor and remove the irrelevant bits. Or alternatively, we could say, well, I have these really extensive forms, but they're more than I need in my firm, so I'm going to tailor those forms down to be appropriate for most situations, and then train and trust my partners and staff that occasionally, and in a review very infrequently, they'll need to do more. Now, time for engagements is finite. There's X hours. And during those hours, do we want people to be doing work, testing, finding out whether things are wrong or not? Or do we want people spending their time filling out pages and pages of documentation? So I think I lean towards item number 2. Now, PEG provides a very complete set of forms. We have 6 pages of acceptance, 4 pages of continuance, a lot of understanding forms, 11 pages on systems, 2 pages on materiality, and so on. When we get to perform procedures, we've got 30 forms. I'm guessing 90 pages of forms. Most of my review engagement files wouldn't be 90 pages long. So having 90 pages of forms on performing procedures would be more than my whole file. 2 pages on doing prepaids. That'd be more than I would have in most audits. 2 on summary of unrecorded errors. I wonder about that because I think many times in a review the client wants us to fix everything. So I think I would tell my staff, don't have a SUE. And indeed, for instance, if you find a $1 error in the bank rec, if you don't fix it this year, it's going to be there next year. So a $1 journal entry, which you probably wouldn't make in an audit, you might make in a review because the client's kind of expecting you to fix stuff. A completion checklist, subsequent events, matters to communicate, all told 135 pages if you use them all. So I think the authors of PEG must intend us to tailor them, and indeed the first note on all the programs says this, tailor this program. So that's important to do. It also says we should document who we talk to, so as you're tailoring these forms, maybe you're going to take that out. It's not required documentation, so do you want your staff spending a lot of time documenting who they talk to rather than doing work? So consider whether you want to take that out as well. Now let's just go through some of these forms in detail, see if we can't make them a bit simpler. As I said about all the forms, there's a summary of what the form does up top. I just delete it as not needed. A reference to the quality assurance manual, you can keep or delete that as required. You could have that in the completion checklist if you wished. A list of risk factors, I would delete that and move it to number 3. And then review of the prior accountant file and report. Now, often that's not possible. You can see the report, but a lot of times now people just said, no, you can't see my file. There's nothing that says I have to let you see it. I'm not showing it to you. It also goes beyond analytical procedures and inquiry, and it's not in the standard. I understand why people want to do it, but you don't have to. Not in the standard, so I'd be inclined to take that out. A lot of questions about management integrity. I would replace that with what's in 2427D. What to do if data is unavailable. I would replace that with 2427C. Testing of opening balances. We are into point number 2 again. It's the wrong form, and indeed that's what point number 2 is about. It's on the wrong form. We've decided to accept the client. Now we're going to go test the opening balances. Question 6 about is the firm competent? It's not required. Maybe we'll keep that just to, stroke our ego and say, yes, we're competent. A long thing about independence. I would replace all of those words with 2427B. Question 8 is about independence again. I would replace it with the same paragraph. Is the purpose okay? I would replace that with 27A, little I, and double I, and 27E. And 27E is a problem. 27E says, is the client proposing a scope limitation? And my inclination is, unless there's a really good reason, and the scope limitation is going to go away next year, my inclination would be if there's a scope limitation, I'm not accepting the work. Preconditions, 28A and B, I'd replace it with that and put that in the engagement letter. The engagement letter I would combine with 10. Other is a blank box, I would delete it. Documenting engagement risk on the acceptance form is kind of not needed, and more even than is required in the section. A conclusion, it should be a review conclusion. Nothing came to my attention that made me believe I couldn't accept the client. And then 2 pages of likely material misstatement, and that duplicates the whole likely material misstatement. I'm going to talk about that again. Documenting likely material misstatement in a whole bunch of places. I don't like that, and we'll talk about that, but I would delete that in the acceptance form. And at the acceptance form, we just have probably no idea what likely material misstatement might be. Same comments on the continuance form. Opening balance form. Again, we have an incomplete summary of what the form does, and I would delete that as not needed. Talked about looking at the previous accountant's working papers, keep or delete as required. It's not in the standard. Previous report, keep or delete as desired. List of documents to obtain. Now I would delete that. We're going way beyond analytical procedures and inspection. We're getting a whole library of documents. And we probably don't want to have all of these client documents in our possession. Anyway, extent of previous misstatements. Now those questions are probably impossible to complete. We probably can't figure that out. I would replace it with 2400A110A. Are the balances correctly brought forward? And identified misstatements, that's a response. What we're doing about misstatements that are identified, it's in the wrong form. Delete it. Consistency of accounting policies, 2400A110B. Modified report, I'd move that to number 2. Inability to obtain information, that's part of acceptance, take it out. Conclusion, again, I'd have a review conclusion. I think we're missing something, though. There is a procedure in A110C. Now, it's not required, but it's probably the best available procedure. Did we note anything in the current engagement? As we're doing this year's engagement, did anything come along that tells us that last year's numbers are wrong? Now, maybe that's in 4E, I don't know, but I would make that really clear. Is there anything noted in the current engagement? I'm going to take a lot of stuff out here. Understanding the entity. There's no required documentation. My inclination is just an empty box. Do we understand the entity? But the legal name. Well, we've already got that documented on the financial statement, so we can delete it. And the applicable framework is on the financial statements. We can delete it. Number of employees, why do we care? Why does that have anything to do with likely material misstatement? We can delete it. Online address, why do we care? Delete it. Public company, it's impossible to do a review engagement of a public company. It can't be a public company, delete it. Is it a private company? Well, that's obvious from the tax return, delete it. All the rest, it has to be in note 1, delete it. Is it incorporated or not? why do we care other than we'd want to look at the tax return? Delete it. Areas of likely material misstatement. Now this is a second or third time, and this is part of our understanding of the entity before we've done any analytical procedures or inquiries. So we're ahead of ourselves, and it's a second or third time. In the end, I think I just want to have a blank box. After I've done my analytical procedures and inquiry, I want to have a blank box where I say, here are the no likely areas of material misstatement I identified, because there weren't any. And then what kind of entity is? It's a restaurant. In your professional judgment, is that enough to tell you that you know what it is? And is that something that another practitioner would understand what was going on? And I think that's probably enough. Now the problem with identifying likelihood of material misstatement is many places. I didn't count, but I think in the end there's probably 10 places where this is done. Now we're duplicating work. We're spending a lot of time writing the same thing over and over again in more than one place. So I only want it in one place. But more significant than that is if we've got this in 10 or 15 places and we've got all kinds of them, we'll forget to address one of them. We'll identify something and then forget to address it. So I want, if we do identify likely material misstatement, which again I've said is probably going to be unusual, but if we do it, I want one single place where I write that down, and in that one single place I want to go to it and I want to describe in that one place exactly what I'm doing and exactly where I'm doing it. So only one place, and address each, if any, hopefully none. Now the systems documentation, it is certainly very complete. Might even be good enough for small audit, actually. It's a really complete form. But I would ask, can you, in your professional judgment, replace this with a blank box where you say, uses the following software package and the controller reconciles the bank? Is that all we need to understand about the system to identify likely material misstatement? And all we need to know about systems and records? And if that's your conclusion, I think you can replace that whole form with a blank box. Now in the appendix they give us some hints, and I don't necessarily like to pay attention to the appendix because it doesn't tell us things we have to do. It tells us things we're allowed to do. But here I find it useful. One of the things the appendix says is use your professional judgment as to how much you need to know about the systems. And remember, there's how much you need to know and how much you need to document. So you need to know something, but there's no documentation requirement, though you may choose to. Now, A84 gives us some, well, you might do this or you might not do that. A87 is pretty clear. No design and implementation, no operating effectiveness. We are having very skinny information on systems. And it says that our analytical procedures can help. So I'll let you look at that form and decide how much you want to keep and how much you want to delete. Remember that the more time we spend documenting, the less time we spend doing analytical procedures and inquiry to make sure the statements are at a review level correct. Materiality. Now, I had an unhappy experience one time. I was working in the national office of one of the big firms, and I designed a form on materiality, and it looked an awful lot like the form in PEG. And I was quite pleased with it because, I said, well, staff are going to decide how many years of financial information they want to put in, and they're going to pick which of the benchmarks they like. And I know I've listed 10 benchmarks, but staff are going to know that they're going to fill in 1 year of income. They're going to pick 10%. They're going to write 10% of income in that one box, and that'll be the only box they fill in. And I had a colleague who started all his phone calls with only an idiot. So I have designed this form and I have sent it out for review by other smart people, smarter than me. And my phone rings and I pick it up and say hello, and I hear, only an idiot. I go, hi, Henry. And he proceeds to tell me why every staff person is going to fill out every box and then they're going to take some kind of weighted average and a square root and multiply and come up with some number that's probably not materiality, because they've spent so much time doing math that they have not used professional judgment to determine what a user might think was material. And sure enough, we issued the form, and sure enough, everybody filled out every box. And about 6 months later, we withdrew the form, and I had to tell Henry that he was right. So my inclination with this, because I think the same thing's going to happen with this form that happened to me, is a box. In my professional judgment, materiality is blank. And if you want to just write down $50,000, that's fine. And if you felt like asterisk, that is 10% of net income before tax. That'd be fine too, but you don't have to. Now again, documentation is technically not required by the standard, but maybe your professional judgment tells you you should, particularly, I guess, if you are the partner and you are writing down materiality so that your staff can use the number. So that's probably a reason you might want to write it down. If you are a sole practitioner and you decided not to write it down, I think you could defend yourself against practice review by saying, oh, I didn't say I had to. I did. I used it. I came to conclusions. I assessed likelihood of material misstatement, so I must have figured it out. Now the other thing in this form is trivial is there. That's an audit concept. It's not needed in a review, and I don't know how helpful it is in a review or even in an audit. The other thing is 2442 says you may need to revise. I can't find that anywhere. But I think my inclination would be not to use the form, just have it as a blank box, and I would add revised materiality to the completion checklist, so I would comply with the standards. Now the engagement scope form, I guess that form's okay as long as it's normally blank, and my inclination would be not to use it. The time form, if you want, this may be too detailed for a review, may not be useful guidance to staff, and it may not be well developed. If you just say, oh, 40 hours and pick that out of the air, well, that's not a well developed time budget, and it may be wrong, and it may provide bad guidance to staff. The plan and risk form duplicates and may be too complex. I'm not going to talk so much more in detail about how you might edit the remainder of these forms. I'm inclined to delete that form. The minutes, there's the form number, requires reading of the minutes. That's an audit procedure. It's supposed to inquire. In the rep letter, we could have a standard inquiry of management. Please tell us that there's nothing interesting in the minutes, and if there's nothing interesting in the minutes, they will represent that. We don't need to use the form, and we have inquired. Sales tax reasonableness. Now, I know why people get on, particularly on sales tax reasonableness, but the point is not we need to know whether sales tax is reasonable. This is only GST. But there's PST, employee deductions, workers' comp. There are all of these miscellaneous accruals that could be inaccurate. And this form requires very detailed audit type procedures. The words used are review, identify, reconcile. So we're doing far too much work in this form for a review, and we're not reviewing PST and employee deductions and workers' comp and things like that. Now, you could just inquire of management, and you probably should. Have you made an accrual for sales tax? And, you know, it's a very simple analytical procedure to take a look at the GST return and see whether it kind of looks like it's right. That's not very hard to do, and you don't have to do it in much detail. The other thing is the case that this form was developed from, there was a lawsuit. And if you had looked at the GST return for the last quarter, the accountant knew the client had $300,000 in the quarter in sales of stuff in Canada. and it recorded very low sales and recorded a GST refund. It was impossible. So the procedure that would have been required, the judge in the case said, he didn't say only an idiot, but he could have said it was as plain as the nose in your face that it was wrong. So you need to do plain on the nose of your face, review engagement procedures to see if PST, GST, employee deductions and stuff like that are properly accrued. It's not that hard. The other thing that is done here and in many other forms, the word inquire is used as a synonym for an audit procedure. And as I say, review, identify, and reconcile. These are audit procedures, not review procedures. Now, procedures are 90 pages long. The first note requires editing. The first note says, you better edit this. So it's up to you to edit, and lots goes beyond analytical procedures and inspection. And that's fine, because some of these might be procedures you needed to respond to likely material misstatement. But remember, the first part we do is analytical procedures and inspection on all. Standard says all material. I'm just going to say, all analytical procedures and inquiry. I think I said inspection. Analytical procedures and inquiry on anything. That's everything. That's not hard to do. And the second part of the program is only done if there's likely material misstatements. So you should be able to shorten this considerably. And for instance, prepaids. This is way more than I'd even do in an audit of prepaids. So you would assess, is there a likelihood of material misstatement? You would compare it to last year. It's way below materiality. It's about the same as last year. Makes sense to me. I don't think there's a likely material misstatement. So I think you need to go through the remaining programs and decide what is needed to assess whether or not there's likely a material misstatement, and keep that. And then indicate to people that the rest is to be deleted unless material misstatement is likely. Now, some are not always needed of the remaining forms. The SUE form, for instance, I talked about that. I would be inclined not to have a SUE in a review. I would be inclined to tell my staff, fix everything. That's what the client wants. They want to improve the accuracy of the financial statements. That's even said, by the way, in the audit section, that correcting all errors improves the accuracy of the financial statements, and it's a good thing to do in an audit. It's a good thing to do in a review too. The completion checklist, I would go through to see there what can be deleted, what's duplicated, what has to be there from the things you have to do from 2400. And the documentation, just a final comment on documentation. You cannot tell if work is well done by looking at documentation. And we all know that. We've all had experience where we've looked at a file, we thought it was well done, the documentation was beautiful, only to find the documentation had been faked. And we went, oh, rats, it looked really good. I couldn't tell that it had been faked. Now, reviewers and practice inspectors believe you can determine that the file is well done and properly done by looking at documentation, and it's the only test they have, so I guess they have to believe that. But I think we all know that it's just, you cannot tell whether the work was well done by looking at documentation. And if that's all you do, if you're not supervising staff in real time, talking to them, all you're doing is looking at the documentation, you're going to miss something. Now, this belief by reviewers and practice inspectors leads staff to create documentation at the expense of doing work, and we can't tell. We can't tell whether the staff spent all their time doing documentation and no time doing work. So one of the risks of complex forms is that staff will carry them forward without actually updating them. And some of the forms we talked about that are so very, very complicated, there's a risk that staff will just pretend they updated them, say they talked to someone, and didn't update them properly or at all. Now, we have an obligation to our clients to do the review in a fair and proper amount of time. So if we are developing a methodology that has an enormous amount of additional time on documentation, That's kind of not fair to our clients. It's something that will make staff become bored with public practice. They will go, I thought I was doing like work to make sure financial statements were correct, and I'm not. I'm just preparing pages and pages and pages of documentation. I'm getting out. And if all we're doing is documentation, there is a risk that the financial statements are still wrong and we're going to get into trouble. Keeping file reviewers and practice inspectors happy is not the point. We would like to be doing work to make sure that at the level of a review engagement, nothing's come to my attention. The financial statements are okay. So, the authors of PEG have been very, very complete. They've said explicitly, you need to tailor these forms, and I think you do. So I think you need to conclude as to what the standard package appropriate for the type of the clients of your firm is, and tailor these forms down to that. And reviews can be simple or complex, and I think most of the time they're simple. So I think we can find a way to balance the work we do, more work, and documentation, less documentation, and meet the documentation requirement of the section. So thanks for listening.